we find like people that work with us, the average is $2,484 per month with using the 4 I's of improving their finances.
Wouldn't you like to have that money back in your
Because it was either going to Wall Street or financial institutions or insurance companies. Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. Are you doomed to scrimp and save your life away in order to get on solid financial ground? Do you feel that too much of your money goes to financial institutions and government rather than your quality of life? What are the steps to create a solid financial foundation and keep way more of what you make without having to cut back or budget? If you're looking for a way to live better today and still be prepared for your financial future, pay close attention. I got Stoba with me here today.
I'm glad to be
Normally,
here
I
with you.
kind of do these as green screen rants, we call them, where I'm just, direct to green screen. But we're up at the cabin today, and so I'm like, "You're here. Let's do this." You're always a good insight and good asking questions and making sure that I'm clear with whatever, and giving us a little humor.
Yeah, do you feel that too much of your money goes to financial institutions? If I knew what I knew now, back when I was in college, I probably wouldn't have gone to college and taken out student loans. And I'm like, I don't want my money to go to those institutions because it's just such a drag.
I would have hired you regardless of your college education. It was not part of my consideration.
Right. Yeah. And I just, you're 8, I was 18 when I went to college, 17 or 18. I don't remember.
I had a lot of fun.
Yeah.
In college. And I met my wife, so I'm cool with it.
Yeah. I walked away with fantastic friendships that are still in my life today. But I think of the education that I got for the amount of money that I paid, and there's a big discrepancy. And I think if I just knew what I knew
you
now
get paid to have an education here. I'm just educating you all the time, Stoba.
Left and right on things that I want to be educated on and otherwise.
I'm an oversharer.
Yeah. So I'm just saying all that to say, we all come to a point in our life where we think, I wish I would have made a better decision, or if I would have known this, I would have not put myself in, a peculiar place. But
well, let's give them an education on YouTube for no charge, other than they might have had to watch an ad to get here.
Hey, that's right. Well worth it. So we're going to talk about the 4 I's today.
Well, let's start with the foundational pieces first. Okay. The foundation is we need basic insurances. Number 1, car insurance. If you have a car, pretty simple, but only insure the catastrophic, not the inconsequential. How you design that policy might mean that you get better coverage for the catastrophic things and not spend the most expensive dollars, which are for the things that are not that big of a deal, but you have coverage that kicks in too early.
Like backing into like a light pole at someone's house.
Yeah. Or me backing into a truck in the parking lot. Yeah. Second is homeowners insurance, right? And just kind of collaborating and coordinating between those. Understanding basic liability insurance, whether that's a business owner policy if you're a business, or whether that's understanding umbrella policies or excess liability policies, which are very efficient ways to get a lot more coverage. Disability insurance, which was the hardest thing for me to finally get done when I first started really learning about this, because we don't like to think of ourselves as becoming disabled, but at the same time, you're 3 times more likely to become disabled and die prematurely. And yet a lot of people have life insurance and a disability insurance, which is, from a financial standpoint, can be a living death kind of thing. So,
and disability, like it has a broader term. Like, for example, we work with a lot of dentists and chiropractors, but if there was an injury to their hand and they couldn't adjust or do a cleaning. And
it could just be sickness. It could be that you're not quadriplegic or paraplegic. It could be a temporary illness, but that could be pretty financially devastating. So it's, and there's short-term disability versus long-term. I'm speaking more the long-term side. Or if you're in a business partnership, you might have a disability buyout policy. Or if you're a business owner, you have a business overhead expense that covers your expenses after 1 month and up to 2 years for keeping the lights on if you're dealing with something. So, and then there's also, long-term care if you're worried about, nursing homes and those kind of things when you can't perform 2 activities of daily living. And then really a big part of your foundation is just building up at least 6 months of savings for your personal expenses, right? That's a huge component of this. And then ultimately educating yourself so that you have the right coverages in what we're talking about here, because that's instrumental in making sure that you have peace of mind and you can be more productive. Now, understanding basics around tax, which we have a lot of videos around that, that's another part of the foundation. Now, if you're not a business owner, it's simpler than if you are, right? It's just your exemptions and what kind of charity things that you do. But when you're a business owner, you might have different ways of how you pay yourself, what corporations you choose, what write-offs you can get. So it's important to understand that. Knowing your credit. and how to improve your credit score. Again, we have a boatload of videos around.
We can link to some of these videos in the show notes.
Totally. So we can link to these, but improving your credit so you can get the best interest rates. And so you have access to cash if you actually require it. And then we look at just basic investments, right? How you protect your downside, find where there's hidden fees or commissions, how you can start creating cash flow with those investments. Those are all kind of foundational pieces, which are discovering what your investor DNA is. So you know what to invest in and what not to invest in. A lot of people go down rabbit holes of distraction because they just didn't know what to actually invest in. So these are just some of the foundational pieces. And the most important thing is that you learn to pay yourself first and automatically set some money aside. Set up separate accounts so it's not commingled with your personal funds. Build up at least 6 months of liquidity. Pay off high interest rate loans. Learn about a cash flow index. Link to that video here as well. So you know which loans to pay off first. Don't borrow to consume. Don't spend more than what you make. And ultimately focus on ways that you can make more money through value creation and production. Keeping more through these 4 I's, which you mentioned, which is...
Before we go into the 4 I's, the foundation...
I'm going to drink that whole drop of water right there. I'll watch it.
Oh, so refreshing.
That is satiating.
So before we go into the 4 I's, the foundation is critical, but it's often overlooked. Or
it's not sexy. I mean, like the only time someone's talking about the foundation of their home is when it's faulty. You know, but a lot of people build their financial house on a faulty layer because we think, oh, we have a financial planner, so that's going to be taken care of. But they might just be a retirement planner that's only focused on you putting in investments for the future. And they might not focus on estate planning or corporate structure because they're not an attorney. Or they might not focus on, you know, credit because that's not their expertise, or they're not looking at cash flow reporting because they're not a lender. So it really requires kind of, to me, it's kind of like raising a kid. Sometimes you need a tribe to raise a kid, you know?
Absolutely.
And so it's the same thing with our finances, is utilizing these different experts and having some of the basics, which, you know, I think if they go to wealthfactory.com/megakit, there's great guides on cash flow and on the mistakes to avoid and the first things to put your money into. There's like 3 different resources that are right there for them.
Yeah. And I think another way we can relinquish control over our finances outside of, you know, saying a financial advisor or someone else can just take care of it for us is through avoidance. So
a lot of people don't want to address
I don't want to look at my
it's scary,
numbers,
it's painful,
my bank account.
It's, you know, it feels overwhelming sometimes.
Yeah. Or I don't know what even questions to ask when I go to my insurance agent to make sure that I have the right coverage and is the umbrella policy good for me, and you know, like how do I have
and
these
then they have their own opinions, so sometimes you go there and they do, oh, that's not
biased.
Important but it might be, but it's just that they, you know, they're order takers, or they haven't really emphasized that aspect of their practice, or it just doesn't pay them enough. So yeah, it's frustrating.
Yeah, but we can't emphasize enough that the foundation is critical to everything else that will come down the pipeline eventually for you.
It's not sexy, but it makes it sustainable.
Yes.
Right?
Yeah.
Now the 4 I's, a little bit sexier, right? Because it's saving money on tax, the IRS for the first I. Second is interest. The third I is investments. And the fourth is insurance. So this is about efficiency and design. So are you tipping the government? Most people are. So
doesn't that make you
click the link, watch some of our videos that are on tax, right? The second thing is with loans, you know, interest, like people are a lot of times overpaying, you know, the institutions. Like right now, I'm actually refinancing something because interest rates are so low. You know, there's ways to renegotiate interest rates. There's ways to restructure loans. There's ways to pay off higher interest rate loans with lower performing assets. There's so much that can be done. We find, like people that work with us, the average is $2,484 per month with using the 4 I's of improving their finances.
Wouldn't you like to have that money back in your pocket?
Because it was either going to Wall Street or financial institutions or insurance companies. And so they're pretty rich if you look at their buildings.
Yeah. So here, you know, one thing that I realized in my own, you know, journey of learning this and implementing it in my life is there is a difference between a bank and a credit union when it comes to interest rates. And I think I just thought, like, you know, the government or the Fed is lowering, you know, interest rates. So it's going to be the same.
Doesn't always mean that all the institutions lower interest rates.
But the institutions have not. And so like at a bank, they could
just increase their profit, not necessarily yours.
Yes. And I was so livid about that because there was a credit union that was offering 2.99%. And then
for a car loan or for...
Yeah, for a car loan. And then for like...
I know they're not offering that for interest.
Yeah.
That you earn.
No. And then like a personal loan was like 7.49 up to 7.99. But then this larger banking institution, they're like as low as 10.24%. I'm like, or for a personal loan. And then a car loan, it was 6.8 or something. I'm like, that is a huge difference. And
think about if you could buy something for $1 and sell it for $6. That's a pretty substantial markup, right?
Right now, I am actually feeling like my blood start to boil.
That's why you're on the Money Nerds, because you're passionate about this stuff.
I am
right?
passionate, and I'm not considered a money nerd. I'm here to facilitate the conversation, but I am just like, the more I learn, the more livid I get, and the more compelled I am for everyone to understand this, so they can live a life of freedom.
Have people stop being inefficient with their money, because most people put the onus on you, the individual, to lower your lifestyle rather than to use financial intelligence to keep the lifestyle the same or better and still take care of your financial future.
Right.
That's the strategy that we have to deal with. That's the focus that we have to create. And ultimately, if we can get you to economic independence, where you have enough cash flow to cover your basic expenses with your assets, you have more choice. A lot of people expand their value. Instead of this notion of cut back, reduce, and one day, someday you can retire. Well, retirement, what if we could create a life we didn't have to retire from? Like, I get in the industrial age, you want to retire from manual labor that's breaking your body down. But we're in the time of brains, not brawn. And so what if you could create substantial value? Because there's this movement where people are trying to retire super early. And I get there's part of that movement that I like, which is let's escape out of consumerism.
Right.
And consumerism is a plague on society that destroys people because they're being taught, trained, and educated. If I buy something, I'll be happy. If I buy something, that's the answer. It's not the answer.
No.
It could be useful, but if it's a replacement of true emotions, it's detrimental. And so when I look at everything that's going on, this notion of cutting back, scrimping, sacrificing, delaying, deferring, putting money into plans that you don't understand, that you don't have control over, that have it riddled with fees, and the institutions are making plenty off of you, but what you make is yet to be determined, and then you got to figure out how to cash flow with it, but interest rates are super low, and taxes could go up, and inflation exists, or deflation, like it becomes overwhelming. That's why it's get the basics in order.
Yeah.
And then invest in yourself, invest in your skill sets, the most critical skill sets, your emotional intelligence, healing from trauma, figuring out ways that you can add more value in the world, and then retire from the things that you hate so that we still have your, like you're blessing the world with your gifts and you're not burdening your family. Because now if you're 65, what if you make it 30 years? That's a long period of time when you probably only worked for 40 years, that you're going to work for 40 years and then off just 10% of your income. You're going to cover 30 years of living. It isn't working. It's broken, but it's still being promoted. It is a false dream that leads to a nightmare. So I'm here. Let's recover cash.
Yes.
Let's invest back into yourself. Let's focus on cash flow over accumulation. Let's reduce risk. Let's find places where you just build a foundation so you're on solid footing. You have less worry and more peace of mind. You have more productivity and less miserly, scarcity. So there's a lot to be done. That's why we're still putting out videos all the time and talking about these things. And, I like to give additional resources. If you just like watching videos, keep watching and keep clicking. If you like to read or listen, budgetingsucks.com. Very small investment. I think there's just a brilliant amount of resources in there because, like when I think about the amount of intention and study and case studies and, that's 20 years of work put into a book, I think it's a very small investment for a nice return. And hopefully we planted seeds of what to focus on and also given videos with more depth for all of these topics. So anything else you'd like to say?
Oh, I mean, I have a lot of opinions and things I want to say, but maybe we'll save it for another video. I just feel very compelled, for everyone, like take back your power, build your financial literacy, understand your situation, own your life, and don't let the institutions rob you in some ways. I feel like it's like a thief, I like, how do they get by with it? Because
we just keep voting with our dollars.
Oh, it's so aggravating. So I just really want us to own our power so we can all live our best lives. And I think there are some great nuggets in here with setting up your foundation. So take care of that piece, really focus on that. If you have one goal for the rest of 2020, focus on building your foundation so you can enter into 2021 just feeling like a boss and free and you're ready to create,
Right.
Let's do this.
You heard it here, like a boss. Want to master your money? Want to figure out the things that you could do to improve your finances? Click here and check out more videos like this on Money Matters.